Taking a look at today's interest rate markets, let's look at the 10-year note futures as they're selling off here for a second session. 10-year note futures are coming off a better than 1 month high late last week, as we see selling pressure here to start the week for the second consecutive day. And with today's price action, that March future, which is now the lead month future, is ticking below the 111 handle at the 110.30 near the lows of the day, as the markets have intensified some of the selling pressure, particularly on the back end of the curve today. And driving factors, a few things here today. Number one, data in the morning. JOLTS jobs data indicating the labor market remains pretty active, as we did see openings increase and adjustments on the previous month's number. But nonetheless, pretty healthy labor market. Couple that with the Red Book, I believe, showing the consumer sentiment is remaining pretty strong as well. And that it certainly impacted the markets, as we did see some selling pressure initially. But as we move through the day with some of the Fed speak that the market's continuing to interpret and the expectations for the Fed announcement here in 2 weeks, a shifting dynamic where the front of the curve began to rally and the back end of the curve continued to sell off, moving those yields lower on the front of the curve and higher on the back end of the curve. So again, possibly interpretation of the Fed message, the expectations for what the Fed might do here in a couple of weeks as far as a potential rate cut. CME Fed Watch tool now pricing in a 75% chance of a rate cut here in a couple of weeks. But moving in the next year, maybe the possibility of some slowing of the Fed initiative, and maybe that's why we're seeing this dynamic unfold today. Yields, 10-year yield up 5 basis points today to 424 basis points, so coming off the lowest yields in just over a month, a couple sessions ago, and moving back into that 420 handle. And the yield curve shifting. Front end of the curve, the bills and the notes rallying, moving those yields lower. Back end of the curve selling off, moving those yields higher. So steepening the curve today in reaction to some of the data, as well as the Fed initiatives and the expectations moving towards that Fed meeting later this month.